Welcome to Crypto Insight, everyone. Today is a special edition. It is my crypto market outlook for 2022. And I've got a special guest with me who knows a lot about crypto markets, has been following things for a long time from Alpha Trades. This is Amol. How you doing, Amol?
Doing great, man. Thank you for the invite.
Pleasure. So the idea of this is, for me to kind of talk through what I'm thinking about for next year in crypto markets, given that I look at obviously Bitcoin and Ethereum in more detail. I look at the vol space. I look what's going on in the on-chain metrics. But, the reason I brought Amol on and we're collaborating is because he's really all over the fundamental side of things in terms of some of the altcoin space. And that's not something that I do very much. And I think it's a great thing to have someone on to kind of talk about that. So that's why he's here. So with that, let's kick it off. So the questions, really that spring into my mind are, crypto markets recently, for example, have been underperforming, right, the rest of the risk asset space. And, everyone got very, very balled up for a year-end rally, which never came. And the question is now, what do we think, right? The S&P looks like it's well on its way to 5,000. We've got Omicron kind of doing its thing, but looking less and less severe, and that's dragging risk markets up. And we're seeing commodities rallying, we're seeing equities being strong. And normally you'd see kind of crypto participate with that, and we haven't really seen that. Amol, you want to jump in with why you think that might be?
Yeah. Once again, man, I'm really happy to collaborate with you on this. Really excited to see your insight and mine kind of gel together. I think you posed some really good questions in terms of macro, right? Like there are larger news cycles that are going on behind what's happening. The crypto markets. We know for the most part that crypto is still guided by sort of the invisible hand of traditional markets. The flows are pretty much similar. The risk is still, pretty much similar in both markets. And I would say as of right now, Omicron, you're right. I think it's still sort of out there doing its thing. And there's still a subtle fear in people's minds, and that may cause some de-risking in the market. But other than that, it's, in my opinion, really a nothing burger. Mm-hmm. What we probably have right now, the Santa Claus rally, is the lack of participation in crypto, because I believe for the most part that we had such a massive year in 2021 in crypto. You're getting some isolated movements here and there in DeFi, but it's very, very isolated. You might have like 2 or 3 days of the L1 ecosystems popping, like Solana, AVAX, Phantom. But that's really it. Ethereum really has not done anything since like April of this year. It's basically stayed in a large defined range, just like Bitcoin has. Mm-hmm. And I think this is probably going to be the case probably in early Q1 2022. That's kind of my thought process right now.
Yeah, I mean, if we look at the chart, I've got it here. And, we had that crazy day over the weekend where it slammed through that big 53K support and then touched 42K, even 40K, I think, on some exchanges. And for me, that was a massive technical breakdown, right? So I've been trying to sort of figure out on the technicals, and I look at Elliott Wave a lot, trying to figure out where this thing's headed. And I thought we were on a 5-wave advance up towards 80K, right? I thought the bull market was on. We had our catalyst of the ETF approval that kind of triggered the optimism and the rally, and we were headed towards that sort of target between 80 and 100K. That was kind of sensible to me. When we broke below that 53K area, the technicals looked horrible, right? Because what that meant was that 5-wave advance that I was thinking was on, the impulsive move higher, was invalidated from an Elliott Wave perspective, which is something that I do look at and care about. And what that said to me was, well, then if this thing isn't an impulsive wave higher, then that means this pullback we're getting is not a 4th wave correction in this advance. It's likely something else. And if we look at what it could be, well, we could zoom back and we could say, well, this entire correction that started back in April this year, and we had that first leg down, we had the second move up, and we're having this leg down now. could all be part of a much larger degree fourth wave correction, which doesn't actually reach completion until we get back into that 30 to 40K zone at some point, and then the real advance can begin that takes us to new all-time highs, right, of 80 to 100 or whatever, or beyond, right? So that's really the technical scenario that I'm thinking is in progress. And what's interesting to me is since we've been bouncing, and you can see, since we've been bouncing off those lows, that's kind of textbook, right? So you've had, if this is a C wave in this correction, then we're looking at a 1, 2, aggressive 3 that took us down there. And we are now carving out a 4, which will have its ultimate resolution in a 5 down here somewhere, basically, right? And actually the fact that equities is rallying and crypto can't break above this 52.5, 53 level is very consistent with the idea that its move isn't done yet to the downside. And that's what makes me a little bit, I don't think going into the first 2 weeks of the year, I don't think you're going to get your alpha in being long, given your name is Alpha Trades. I don't think you're going to get your alpha being long crypto. You're probably better off being long equities given that technical setup. That's my thoughts on that.
I'm completely in agreement with you. I also really like your ABC corrective count there. What do they call that? Expanded flat or something?
Yeah, something like that. Yeah, it's expanded flat. Exactly. It's because that it actually made a higher high just slightly in that B wave, right? Which is why it's expanded. But exactly, it's kind of, that's what it is, and that's certainly what it smells like to me at the moment.
Yeah. And the interesting part about us sort of coming down into the C wave is that, you know, what we talked about, this larger range, right? We're carving out, and this could be really another 3 to 6 months of a range that we might spend time in, coming off those $32,000 lows, and then maybe making our way up into, I don't know, 50 and 60K in the second half of 2022. And then that puts behind some of the tapering talks, the first interest rate hike, which is supposed to be March 2022. With those sort of visible events behind us, who knows? Maybe that is the catalyst that Bitcoin needs. I know you mentioned this the other day that, you know, once those events pass, it is possible to start, you know, rallying out after that. Do you still kind of hold that thought?
Yeah, I mean, for me, outside of the technical picture, which doesn't look bullish, right? In crypto specifically, you know, I think the thing that's going to drive a bull rally is going to be the institutions turning up, right? So there's been a lot of talk about the whole of this year after the bounce out of 2020, the crypto adoption, the likes of Tesla and MicroStrategy going big on it. You know, the whole of this year was about all the other instos catching up and getting approval and getting their head around the idea that they should be allocating in the space, right? They should be allocating in the crypto space, particularly in Bitcoin, as a bit of an alternative store of value, as some part of their portfolios. And I think, you know, Raoul Pal's been a massive advocate of this and saying that this is the thing that's going to drive markets higher. Now, he was also calling for a year-end rally like everyone else and their dog, which didn't happen. But you know, he's a believer that a lot of these instos are going to wait until Q1 and they're going to start allocating towards crypto, towards Bitcoin, maybe a little bit of Ethereum. And the reason why he believes that is because then I've shared on the screen that you've got the idea that if you look back at a 10-year history and you add just a little bit of Bitcoin into your balanced portfolio, call it 5% or less, the outperformance that you have achieved over that 10-year time horizon is staggering, okay? The fact that Bitcoin has been not so correlated to risk assets and has offered you that much outperformance, your risk-adjusted returns, yes, the risk is higher when you add a bit of crypto to that portfolio because it's a much higher vol asset, right? Crypto trades at roughly 5 times the volatility of regular markets, but the risk-adjusted return, even though you add that extra risk to your portfolio, is far greater because the returns that you've achieved having that little bit of crypto in there have made sense. So the idea is you're going to get a wave of institutional adoption from these types of players, and there's a lot of kind of weight behind that argument. You are seeing banks getting bigger in the space, offering that to clients. There is definitely the infrastructure and the pipe work being built from a custody level to facilitate a lot of allocation into the space. It's just now a question of when does that allocation turn up? Does it turn up in Q1, Q2? Is it price sensitive? Does it wait for dips to turn up? Does it chase the market higher? Does it wait for a bit of momentum on the upside and then start chasing? That's what we don't know. That's what we're going to have to keep an eye on to get a feel for and try and kind of get an idea, like what instruments are these instos using? Are they using the ETF to get long, right? Are they using futures to get long? Those are the type of things we have to keep an eye on to really get a feel for where this institutional adoption is turning up and what it means for the market, basically.
I think the other interesting part about institutions getting involved is Bitcoin and Ethereum are probably the largest, most liquid markets, right? Mm-hmm. You can't really allocate in the same way to something like Avalanche or Solana. You can't just plug in, 5 or 10 billion whenever you want as a large fund. It's just not possible. So I'm kind of thinking to myself that, are these institutions really working with other funds in the crypto space to start maybe, carving out a couple of $100 million to push into the market? And if so, are they going to be, price sensitive? Are they going to be investors for the long term? Are they willing to kind of take these big drawdowns that you see in crypto? Because crypto is a very volatile market, and for a fund that has clear risk management strategies, do they operate in the same way that VCs do, or do they have a risk profile where they say, all right, well, hey, if we're allocating even say $500 million, I'm not going to take a 25 or 40% drawdown, in the span of 24 or 48 hours, which is not uncommon in crypto. I'm always curious about how do they even go about allocating to smaller cryptos, or do they at all? Do they just kind of shrug it off?
Yeah, I don't think they allocate to smaller cryptos individually like that. I think they're likely to throw some money into a fund that does that for them, right? That manages that risk for them. They don't have to worry about stock picking kind of within crypto. Leave that to the guys that have been in crypto for a decade who are better at it than them. I think, so you're going to get different types. You're going to get people who want that 20x, 50x upside in those smaller tokens, who are going to outsource that to an expert, who are going to throw some capital that way. And then you have other guys who just only trust the large caps like ETH and Bitcoin and just see the value of having some allocation, and a relatively small one, but having some allocation in their balanced portfolio to those things, because it's kind of the same as having a bit of gold, but it works when gold doesn't, basically, right? And that's kind of what we've had going on. And that brings me on to the question about Ethereum, right? So if I share the Ethereum chart, obviously, or the Ethereum Bitcoin cross chart, that's something I keep an eye on a lot. Followers of mine will know. And, it's definitely threatened to break out to the upside, right? This is one of the reasons why, again, Raoul Pal has been going all in on Ethereum, let's say, or close to all in on Ethereum, because he thought this breakout was happening on this 0.08 level, and we were going to have legs to go a lot higher. And Ethereum's got a lot of things going for it, right? The fact that it's the building block, it's the foundation of a lot of DeFi. Yeah, Bitcoin's a store of value, but it's kind of how many use cases it has is the question. Obviously, it's improving with the likes of Lightning, and people are talking about some sort of smart contracts coming on top of Bitcoin at some point. But ETH was built for that, right? ETH was built for smart contracts. And you've had a lot of developers building on ETH. You've obviously had massive explosion in the number of users, wallets, transactions going on there, to the point where gas fees are getting quite bad. But the question is, will ETH, everyone's thinking ETH is the big thing, right? Because ETH 2.0 is coming. We're moving from proof of work to proof of stake. The supply of ETH is going to get shredded down to 12% of what it would be otherwise, a triple halving. I've talked about that before. So the question is ETH going to deliver on its promise? And I think this is the year that's going to tell us that, right? Everyone's expecting at some point this year, we're going to get the 2.0, we're going to get the sharding, ETH's going to prove that it's scalable and all these things. technically it's retesting this breakout level, which is quite an interesting area where, you know, you'd think if you're a buyer of ETH versus Bitcoin, this is a nice place to start dipping your toes in, given it's retesting this area, which if it's going to go higher, it should really hold here and build off this level. If it breaks back into the range, then who knows, right? We might be waiting a while, right? But there's definitely been a lot of speculation around ETH in the options market, particularly in March expiry, where people piled into upside in March to play this kind of this ETH 2.0 story. I suspect it's going to get delayed, like a lot of these upgrades do, and it will be a bit of a disappointment for the market. That doesn't mean it won't happen at some point this year, but I don't feel like it's going to be an easy ride for the ETH bulls. Is my guess. What are your thoughts?
I'm right there with you. I don't think it's going to be an easy ride for the ETH bulls, because the other thing is Ethereum. If you look at the year of 2021, it has not been the greatest chart for breakout traders. Every single time you can look back on, you know, every single daily or weekly candle, when it's about to break through a key level, it just goes up, fizzles out, comes back down. And it has been very, very brutal for a lot of people. So what I suspect, even on the ETH BTC chart, is that it's going to surprise a lot of people how long ETH can just stay in a larger consolidation and just start, you know, grinding sideways. It won't look like it's going to just start dropping straight down, but it will be like this most slow, painful bleed that if you're an ETH bull, you're probably just going to be like, all right, well, I'm just going to rotate away from this thing, because honestly, a lot of people in crypto, we don't really have that patience that a lot of TradFi people do, which is having your strong bet conviction and, you know, watching the technicals and the fundamentals of the asset play out over a longer period of time, you know. And going along with what Raul said, I mean, yeah, for the most part, he was kind of spot on until we started to recognize that, wait a second, Bitcoin was unable to hold above the $65,000 breakout. It actually sold off quite aggressively, but ETH is actually holding up much better on a relative percentage basis, right?
Yeah, but if we are right about the consolidation not being over and it being a larger degree fourth wave, ETH's not going to escape that, right? So you look at this ETH chart I've shared on screen, you know, we're at a pretty key level here in ETH at around 3,900. There's a big support at 3,650, but below that, you know, there's a bit of a void, right? And we could easily see ourselves back at 3,000. And I could see a situation where Bitcoin consolidates back into that 30, 40K area and ETH goes back to 3,000 as a minimum before this correction's over, basically, right? Would I be interested in buying a bit of ETH versus Bitcoin post that type of move? I think I definitely would. And I think I'd be looking for ways to play in the options market, like I've done historically, where you can buy calls on Ethereum and sell calls on Bitcoin, struck way, way out of the money. And you basically have almost a free call on the outperformance if it comes, because it's very unlikely, in my view, I might be wrong, but if we get the consolidation, Bitcoin down to its ultimate level, wherever it may be, call it 35K, ETH down to 3,000, when we bounce out of that and we start the next leg higher, ETH's going to outperform on the upside, right? That's my thoughts. And if it does, doing those call versus call trades will be a beautiful trade to do and will offer you a great risk reward with very limited downside if the rally doesn't actually happen, because you don't actually spend any premium on it. So it's quite a nice way to play it, I think.
I mean, you're totally right. Like, listen, in bull markets, we know historically that Ethereum has a pretty high percentage outperformance against Bitcoin. That's why we look at the ETH BTC chart, right? That's why we all pay attention to it. And that's obviously been true since the 2020 March COVID sell-off. Ethereum has been performing much better on a percentage basis than Bitcoin. That's simple. I think to unpack some of the previous points that you had was what exactly, you know, is going to happen with Ethereum. You know, let's just say if Bitcoin does go to 32 or 35,000, I think Ethereum can easily go back to mid 2000s. It could be a wick, you know, it could be a very sharp wick, just like the one that we had in May, I think, but it's not out of the realm of possibilities, right? Because I think the one thing that people in crypto hate is when Bitcoin starts going down, it has this tendency to start correlating all the downside risk, as one-to-one correlations, and everything falls with Bitcoin.
Mm-hmm.
And people still don't really want to accept that. But the fact of the matter is you have to accept it because Bitcoin is sort of the market leader and it guides and leads the flows in all other parts of crypto. So even right now, you may see some slight outperformance like Matic or Curve, Solana. They're doing better than Bitcoin, on a day-to-day basis. But if Bitcoin kind of shits the bed, for damn sure every one of your positions is going to get whacked. There's not a single coin that can like outperform or do better than Bitcoin on the downside,
And it's because it's the safety trade, right? People
Totally.
know the other names are high beta, so they're like, okay, Bitcoin's going down. I know that's not about to disappear, whereas some of the others might, right? So they flood back towards the safety asset. But it was interesting though, like that weekend sell-off in Bitcoin that went crazy. ETH massively outperformed, right? Way more than 100%. You would have expected, right? So, and I think it's because the sell-off was so short-lived, right? And it recovered so quickly. Had that sell-off in Bitcoin persisted, and we had actually broken 40 like a few days later, and it had gone again, I think that's when you really would have seen the alt space crumble, right? But because you didn't get that sort of retest of those lows, it kind of survived it for now, right? And jury's still out on whether it will, because I still think it needs that last leg down, which is missing from the count. But yeah, alts, I don't think alts are going to survive that. And there'll be a great opportunity to buy. I mean, it's a good segue onto the next question, right? Like, let's say we're lucky enough to get that dip in alts, right? And Bitcoin has another leg down, it takes the whole space with it over in Q1 or even in January. What do you think will be the winners in 2022? What DeFi tokens, what metaverse tokens, what you're looking at, and feel free to share the screen and let us know your thoughts.
Yeah, for sure. So let me share my screen here real quick. So I have this, 2022 predictions newsletter coming out. So I'm going to share with you and your community first. This is what my thought process is on 2022. Okay. Now, obviously, top tier coins like Bitcoin and Ethereum should always be in your list. That's hands down no brainer. Okay. I believe on the downside, these two, Bitcoin and Ethereum, will outperform in terms of just downside protection versus, let's just say, everything else in this list. The other 9 that I have in this list are just in case, even after the sell-off, if things start to run up, I believe these are going to be the high quality names. And I'm not just saying that, just because they've been performing well so far or they have a lot of hype behind them. The interesting thing is in 2021, what we saw is outside of Ethereum, you saw a whole new ecosystem, a whole new DeFi ecosystem being carved for all these different assets like Solana and Luna and Avalanche and Harmony. And that's because they offer something that Ethereum doesn't, which is the feeling of you're getting in on the ground floor of the next Ethereum. Or you're getting these high dividend returns or interest for parking your money. Even though it's a complete gamble, people want to feel like, hey, I have the opportunity for the next 5x or 10x. I have the opportunity to buy into something before it truly blows up, right? And on top of that, all these are cheap, they're fast, and they're fun and easy to use. And honestly, that's what a majority of the newer retail users want, right? So if you think about it, these are the clearest, bets that are most obvious aside from Ethereum. Now, if you're an Ethereum whale or you can afford, say $200-300 transaction fees, all right, that's good, kudos. But a lot of people can't. A lot of people want to be transacting on Solana or Avalanche for pennies on the dollar. And this allows you to do so. So I believe in terms of what I think is going to be hot in 2022, the safest bet is still the other L1 ecosystems because they still garner a lot of value. They still have a lot of...
There's a big discount in them relative to ETH, right? So there's the convergence
100%.
trade there, right? Yeah.
Exactly. Yeah, exactly.
Mhm.
And the great thing is, market cap wise, like they're not huge. I mean, Avalanche, I think, sits at maybe a 20 billion.
Mhm.
Solana is somewhere near like 45, 50 billion. If
Mhm.
you think that, Ethereum is going to shave off more of its market cap towards these other L1s, then
Mhm.
some of these can easily double or triple. It's not out of the realm of possibilities.
Yeah. I agree.
But
And I also think that they're a bit of a hedge, right? Like, obviously, I'm an
yeah,
options guy. I'm always looking for hedges and stuff. And it's like, well, if if Ethereum does suffer at the hands of some of these other tokens, then the point is you diversify your crypto exposure and you say, whatever I would have in Ethereum, I'm going to park 10% of it in these other layer ones instead. And they will
mhm.
offer me some protection in the scenario that ETH gets, you know, taken out by some of these other guys. And I don't think it's going to get taken out. That's not my view. But the idea is if it suffers at the hands of and it loses market share, and some use cases like NFTs, for example, people just start to not really care about NFTs on Ethereum anymore because it's too expensive. Solana's offering us what we need. That those are the type of things where it can hedge you out a bit for that scenario, right?
Yeah, I totally agree. It doesn't hurt to have a hedged bet or even a higher beta bet against Ethereum
Mm.
because you already know for the most part that these are not just small shitcoin projects. They're now multi-billion-dollar projects that are providing real utility and value. You
Mm.
know, so I think these are good bets. And then I think GameFi and Metaverse, all this stuff really started to make its way into end of 2021. But I don't think the thesis has played out fully.
No.
Given that Facebook is rebranding to Metaverse or Meta, whatever it's called, I think they're going to start really building that space out further and further. It may not be like an instant, 3 month, where these projects start to take off.
Mm-hmm.
But if you really look into the future, GameFi, which is sort of the gaming play to earn projects that are coming out,
Mm.
Metaverse projects that are coming out, yeah, a lot of them are probably just BS, probably scams. But if you do your research and you start recognizing that there's good teams behind it, good money behind it, and you actually use it. So, for example, DeFi Kingdoms I've used, Axie Infinity I've used.
Oh, really?
I've started to check out Helium and Render Token. These are your IoT, the Internet of Things kind of tokens.
Mm-hmm. Mm-hmm.
Render Token especially. I mean, it's one of those projects which actually multi-coin capital they just got into in a very big way. And what it does is you're lending out your GPUs to a cloud, or rather a community of people, so they can then use your GPU processing power to create NFT art or to create video games. Why is that important? Well, because if you start to use GPU processing power, let's just say through AWS, it could be very expensive. And
Mm-hmm.
if you're a small time artist, maybe you just want to borrow some of that power from other users who also want to make money. So you get paid in render tokens to give up your GPU power. So these are
Mm-hmm.
all, smaller projects that are very ambitious, but they have very good ideas, and that they're ambitious in a not crazy way. It's like, okay, it makes sense. Is it
Mm-hmm.
going to pan out in the same way that we see? I don't know, but it's worth taking a look at. So this is my list.
Brilliant. Well, I'm going to share, obviously, in the description of the video, I'm going to put a link to your newsletter, so everyone gets to access that and have a look at your predictions for the
Wonderful.
year and stuff like that. All right. So I guess the next sort of thing that concerns people is regulation, right? So
Mhm.
how do you see regulation this year come in the new year? Do you see it as a net positive or a net negative? Because there's different schools of thought, right? People are thinking the more regulation there is around the likes of Bitcoin, Ethereum, the more institutional adoption you'll get, which will be good for price. Then you've got the other side where if you regulate stable coins too much, then because they're kind of competing with banks to an extent, offering yield on like a stable currency, that's not really what the banks want, right? So they're going to
Mhm.
resist it and they're going to try and create frictions and issues for that growth of that space. So where do you see the regulation side of things, and how risky is that for the crypto space?
So I'm personally a believer that free market will always win out and dictate, what people really want. Okay. I know, especially in the US, it's kind of terrible that a lot of politicians are not accepting the idea that crypto itself can be a net positive for people or for the government. But it also doesn't make sense because stable coins are pegged to the dollar. Like, why wouldn't you want that kind of, supremacy for the dollar to, further be perpetuated, right?
Mhm.
But politicians in America don't get that. And that's okay. Initially, I don't think it's going to be a net positive that regulation is coming in. Why? Because it's spooky, it's scary. You don't really want, government's hands in crypto. The whole idea of crypto is like you're trying to create this decentralized parallel financial system. And once you start getting the hands of all these politicians, then aren't we just another extension of the current traditional financial system anyway? So I think, yes, there's going to be a balancing act and there's going to be compromises made. But I believe that at least America or the Western nations are going to find their way through these times where they need to accept crypto and they need to realize that overall it is going to benefit technology. Overall, it's going to push our people's financial access and ability and well-being in a better way than the traditional financial system can. So yeah, initially it's going to suck, probably because also we have headwinds of other things like the interest rate hikes and all that. It's just going to spook markets in general.
I feel like on the regulation side, the institutions who are coming into crypto won't be spooked by regulation. They'll be comforted by it, whereas the retail participants will be spooked by it. I kind of feel like that's what it is. It's tug of war between what type of regulation is it, and is it insto friendly, which encourages them to come in, versus is it spooky for the retail guys who are thinking, what's going to happen to this token if there's too much regulation? Is everyone going to dump it and that type of thing, right? So I think it will be determined by who is the marginal player in the market. If the marginal player is the retail guy, regulation will be taken badly. If the marginal player is an insto allocating, they won't care. They'll see it as a good thing, right? That's kind of
totally.
Yeah.
I mean, you're absolutely right. Like, institutions want regulation because they want to be able to protect their money in certain ways that current, crypto systems just don't offer. Yeah. And that makes sense. Like in crypto, you don't get to start talking about, moonshots and we're all, going to 100K or whatever. And then at the same time, you say, well, we want institutions to come in, but on our rules. Like, you don't get to do that, because if you want big money to come in, then they get to decide what kind of rules they want to obey to come into the space, and so I'm in agreement with you.
Yeah, cool. And I think something I like to keep an eye on is the on-chain stuff. And so recently, something that caught my eye was, and Glassnode do a great summary of this on a weekly basis. They do a weekly video going through a bunch of metrics on there. And I always look at that. I find that very useful. It's kind of like your fundamental side of crypto, basically, to keep on top of things. But this chart shows the miner net position change over the course of 2021. And whilst you had a load of miners selling in Jan-Feb, when we had that massive blowout move to 40K initially from the back end of last year, you've seen over the course of this year, for most of this year, miners have kind of stopped selling, right? Which is interesting. Yeah. And from what I'm hearing, it's because the financing options available to miners have been growing, right? So you have the likes of Marathon Digital recently announcing that they're going to issue a convertible note. They're going to raise $500 million, and they're going to use that to expand their operations to increase their hash rate by 600% with their plans into 2023. And so as you have more and more miners expanding, and yet they don't need to sell their coins to have that cash flow to then do their expansion plans, they just borrow money and they keep it on their balance sheet, basically, the coins that they mine. That's a supply of coins that just isn't hitting the market that used to hit the market, right? So as you get more institutional adoption, more demand coming in, and you get the supply not actually meeting that demand, what do you think is going to happen to price, basically, right? So from a long-term perspective, it's a very bullish sign for absolute prices in things like Bitcoin to go a lot higher, I'd say. Yeah.
Yeah, 100%. I mean, I think one of the fears that we always had in crypto is when we start seeing on-chain data point to miners starting to move, Bitcoin onto exchanges, you're expecting a dump like within 24, 48 hours. I mean, and more often than not, that's been true.
Mhm.
Even pointing out to the on-chain data, I was just seeing 3 or 4 days back, there was a good amount of BTC that was loaded onto exchanges from the miners' flows. So I was thinking like, okay, well, we're right into this key resistance area of $52,000. Maybe we do get a pullback. And lo and behold, like we got that pullback. We went from 52 to 49 today.
Mhm.
Maybe they haven't sold yet, but it looks like more than likely they started selling, in small chunks. They don't
Mhm.
just like market sell all at once. But I think you're also right. Like maybe the behavior going forward is changing. Maybe because people want to control the miners' flows. Maybe they don't want to just I don't know, panic over a weekend and see miners just like crushed price by 30% just because they wanted to.
Mhm.
And I think, yeah, institutions wanting to get involved, they want to kind of herd the miners a little bit.
Mhm. Mhm. Okay, so that's kind of covered a lot of the points I wanted to touch on. I mean, one of the things that obviously is my niche that I look very closely at is the volatility side of things.
Mhm.
So I've got a few charts, I'd like to share on that, and we'll see what your thoughts are on the discussion. So this kind of I had a look at like the vol metrics that I look at using Genesis Volatility, which are my partners on the crypto side. And they have some really great charts. I look at them on a weekly basis to see what's going on. And you can see the top left chart is kind of showing us, and it goes back a few months, right? So each of those different colored lines represents a different maturity implied volatility. So you can see
Mhm.
that over December, all of those lines just got crushed, right? So volatility, implied volatility, which is effectively the pricing of options, has collapsed to the year lows pretty much across all maturities, right? Now, that's not overly surprising when you look at the realized vol. So if you look at the chart below that, that's called a volatility cone. What that shows you is for each of the points on the x-axis, those are different maturity windows, 1 day, 7 day, 30 day, all the way to 1 year. And what it does, it looks back at the previous year and it says, what has been the realized volatility for that time horizon? It then ranks it and tells you what the minimum realized vol was, what the maximum, what the median, and the different percentiles. And it tells you where the vol is now relative to those different ranks. And what you can basically see is the blue line, which is the current realized volatility across all those timeframes, is sitting either at the lows, which is the pink line, or
Mhm.
pretty much near the lows across all tenors. So it's saying that right now, we have got very, very low realized vol in crypto, right? In terms of what we are used to seeing, right? Um,
So
go on.
just to interject real quick, what do you think your interpretation is when you see the implied vols at the lows and realized vols sitting at the lows as well? What does that like mean to you?
Well, I mean, I think right now it's a year-end phenomenon a little bit, right? So you would have expected as we go into a holiday period, less people want to be sitting at their screen trading. You would expect to see a bit of a tail off in terms of realized and implied. They kind of track each other. Now, you don't always see them moving in tandem. Sometimes you see realized fall off a cliff and implied just holds. And the reason it does that is because people anticipate a move will be coming, right? The fact that implied is getting crushed alongside realizes people are just saying, well, I don't really see a big move either way right now. Okay. And that kind of makes sense, right? Because we're in this, and if we go back to when we're looking at the technicals, we're in this consolidation phase where we haven't managed to break above 53, 54K. So we've got no reason to think we've got some really sharp rally about to happen until we get above at least those levels to feel like that kind of correction is reached an end. We've broken back above key retracements and now it can actually rally, right? We haven't seen that. So we're not fearful of a sharp move up. So that probably gives people the appetite to sell call options. And if you look at the bottom chart, the bottom right chart, I've said short dated call selling. This is something which we call the block sniffer. So what this does, it looks at all of the paradigm flows that are going up in Bitcoin over the last 2 weeks, and it highlights the maturities that are trading and the strikes that are trading in terms of the big clips, the big blocks, right? Which are like the more institutional size rather than the retail size. And you can see these 7th of January, these yellow ones popping up on the calls, 50K, 52K, 53 and 54K. So what is likely is that is call selling flow in the short part of the curve. People who are willing to sell some short dated calls to earn a bit of premium because they're not fearful that the market's about to smash higher, basically, right? And that's where that implied vol selling is likely coming from in terms of short dated upside. It's a phenomenon we see a lot in traditional markets. On S&P, for example, systematic call sellers are always smashing the short dated calls out to earn that time decay, to earn that premium. And the more institutional adoption we see in crypto, the more we're going to see call selling flows coming to crypto and really smacking that front end down, basically, right? So that's what's been happening, and it kind of ties in with like what the technicals are telling us on spot. You don't need to be too scared of a real sharp rally right now. In terms of the downside, I think the fact that the market kind of couldn't break that 45K area has also made people quite comfortable that if we do drop too far, there is a bunch of institutional buyers waiting in the wings to buy this market. So you've also got the idea that we're not too scared of an extreme downside move now, because we had our extreme move. And if you were watching, and I don't know if we can see it here, yeah, on that extreme downside move that we saw in kind of early December, whilst you had a pop in vol in the pink line, none of the other maturities really did anything, right? Which basically meant that implied vol just barely reacted to a 20% sell-off in a day, right? So that tells you that the vol market's just not very scared of a really sharp correction, right? Yes, we might have some more work to do on the downside. We might need to retest 40K, but the vol market just wasn't spooked by it, right? So that's kind of showing you the vol market's getting quite comfortable with that these levels of vol are just a bit expensive, and the realized just cannot keep pace with those levels of implied. So whilst we've got those realized sitting on the vol cone down at the bottom end of this cone, the implied, the options market is saying, you know what, we like selling vol, we're being rewarded for selling vol pretty systematically, and we don't really see that changing right now. And that's where that latest leg down in implied vol has been a function of that, basically, I would say.
That's a fantastic explanation. And honestly, it makes sense given what I see on the future side of the market, as well as the spot. And, the technicals that you spoke of. It seems like the market is saying, okay, we don't really know if the market is going to smash up through 52 or 54 yet. But at least to the downside, we know that the market has a floor, a pretty strong floor. Even if, let's just say, we just get a massive wave of selling around 30K, right? Mid 30s or whatever, you know that there is a lot of, value at that level. There's a lot, Bitcoin is seen cheap at that level. And Bitcoin can be seen as very expensive at the higher end of 50s or 60s. So it's like we're still navigating this range of Bitcoin. And now I can see, based on your explanation, how the options side of things is playing in this, whole dynamics. So this is a really great explanation.
The last thing on the top right chart is skew convergence, right? So what skew does is it tells you the difference between implied vol for downside puts versus upside calls. And what you often see, it gives you a good gauge of sentiment, right? Are people bullish? Are people fearful? What's going on, right? It's really quite a sensitive thing to sentiment. And when you had that crypto market sell-off, obviously puts were quite well bid because people were a little bit like, okay, I better protect my portfolio. I don't know where this downside is going to go. So you saw that pink line come down. That's showing a premium for puts. And you can see the pink line has recovered almost close to zero, right? So for 1 week options, there's very little premium for puts anymore, right? It's kind of pretty much all gone away, which means the market's not that scared of a crash right now, okay? Often on the upside, what you see is Short dated puts are at a premium, but upside calls are in the longer dates, like the 6 to 12 month maturity. They trade at a premium, maybe 5 or 10 volts over. And you can see that that's actually been coming in as well. So the longer dated call premium has been coming down. The shorter dated put premium has been coming down, and they've just converged, which basically says the market doesn't really have much of a clue where we're going to go, but it doesn't think we're going to do much either way. It's not getting excited about the long-term upside right now, and it's not getting excited about the short-term downside either, which is just kind of saying, you know what, we're in a range. We're in a range-bound market. We're waiting for more clarity, whether it's on the news front with regulation, whether it's on the flows front from institutions coming in, and even on the macro, right? We've got the headwind of higher rates coming from the Fed. What's the dollar going to do? Is the dollar going to remain strong? If it does, it's probably a headwind for crypto. But then on the macro risk asset side, markets are rallying. Even the Nasdaq's rallying. That's probably going to hold up crypto to an extent. So net, we go nowhere, basically. So the market's very much in that stalemate where it's thinking kind of going sideways. So you don't need vol, you don't need skew. And that's what the options market is basically saying. So it's quite an interesting time right now. I do think at some point, me personally, if we did get that retest of the downside and I felt like the correction was complete, then you're going to have a really nice setup to get long. All right. And you're going to be looking at option structures that get you long, whether it's calls or call spreads. You know, those are the type of things I'd be looking at. For people who are worried about a downside move and they're already long the market, they've been long the market for the year-end rally that never came, and the market's showing us that it doesn't want to rally yet, but you don't want to dump your crypto, then arguably skew's got itself quite cheap now, right? So skew's trading quite cheap. You can use short-term puts versus calls to kind of collar your position, allow yourself to stay long the crypto that you own and know that you're not going to lose your shirt if we do get that final downside test that me and you are kind of thinking is likely, right? So lots of things to do in crypto options right now. And yeah, I think it's definitely a space that people need to keep their eye on. Yeah.
For sure. There's just 2 charts that I want to share with you in your community real quick, and we'll wrap it up. So, you know, one thing that I generally look at, and I think you do as well, is global open interest. So this is overall, you know, open interest, which pertains to the futures contracts in crypto. Typically, when you start to see open interest really reach highs, and then you start seeing price tapering off, which is exactly what happened in April. Okay. Coincide that with, say, fundamental events, which was the Coinbase listing and, you know, a very extended market right near this high. I think there's an individual, Light Crypto, on Twitter. He called us, you know, almost to the T. He's like, okay, well, the market's extended. We see that there's, you know, a very isolated movement in crypto, and BTC is not following that. So you see this sharp pullback, this lower high set, and then there's this big sell-off, right? And this was actually visible in open interest, you know, slowly coming off. You see this big sell-off, pull back right with the lower high in open interest. And then you see a big sharp drop off in open interest. I am personally thinking that as of right now, you know, look at the open interest and volumes. I'm thinking something very, very, you know, eerily reminiscent is happening right now, which is a high in November that was put in for open interest. You see this sort of like lower high rally that you're seeing where people are once again loading up on leverage, very common in crypto. And then you might see another slide to the downside in open interest. And volumes are, I mean, they peaked in May. Like they've been really coming off since then, you know, across all exchanges. So I'm really thinking that the scenario that we're talking about, you know, which is maybe another leg down, has probably a higher percentage of a probability than, say, us just rallying from here.
I mean, literally, the only thing I can see that stops that is that the rest of the risk asset complex is rallying. And I feel like, I don't feel like this thing's negatively correlated. I think there is it might be a relatively low correlation, but there is a correlation, right? I find it very hard to see a situation where S&P hits 5,000 in January and crypto hits back to those lows, like 40K on Bitcoin. If we see both those things happen together, I'd be pretty stunned. Not
Yeah.
to say it can't happen. I would just be quite surprised, right? So I don't know which. I think there's a tug of war going on right now, and I don't know who's going to win that. Basically, right? That's the thing I'm struggling with right now. Yeah.
Yeah.
But I do think on the downside, crypto is going to come off harder, and on the upside, equity is going to rally harder in the next 2 to 3 weeks, right? Obviously, longer horizons, we know crypto's got serious legs in it. Basically, I just think right now, crypto doesn't feel like it is firing on all cylinders, and I don't think that's suddenly going to change on the 1st of Jan, right?
Yeah. Yeah. I'm right there with you, man.
Yeah. All right. Well, I think we'll wrap it up. It's been a great conversation. Hopefully you guys have enjoyed it who are watching. Please comment below, comment and let us know what your thoughts are on crypto. If you agree with us, if you disagree with us, it'll be good to start the conversation. But Amal, it was a pleasure having you on my call, and I hope to do this again with you soon.
Absolutely, man. Let's do it again soon. All right. Take care,
Brilliant.
everybody.
Thanks, everyone. Bye.